So you're thinking about moving to Myrtle Beach, South Carolina, and you're wondering what the deal is with property taxes. You heard they are fairly low, maybe a lot lower than what you're used to where you're currently living, but you also heard they might not be. You heard there's different tax rates depending on if you live here full time and it's your primary residence, or if it's just a second home or a vacation property. And today I'm going to talk to you about the differences, and we're going to get into it right now. Hey, welcome back, and if you're new here, my name is Nick, and on this channel I talk about things to do here in Myrtle Beach. I give tips and advice about the area, and I'm a real estate agent, so of course I talk about the real estate. So if you are thinking about relocating to the area, then be sure to hit the subscribe button down below and tap the little notification bell while you're at it. This way you could be the first to know about what's going on here in Myrtle Beach. I get calls every single day from people just like you who are moving to the area, so if you ever have any questions, or if I can help you find home here at the beach, then I would love to chat with you. You can always use the first link down in the description to schedule a call with me. So you've been doing some research on the Myrtle Beach area, and one of the topics that you might be interested in is the property taxes, which is definitely important because that's going to factor into what your monthly expenses look like when you move to the area, or if you buy a second home or a vacation home down here in the area. Throughout your research, you may have realized that there are different rates whether or not you live here full-time as your primary residence, or if you have a second home or an investment property in the area. You want to know what those differences are, how you can apply to have that primary residence discount, and what those different numbers are going to look like in one situation versus the other. So I'm going to pull out my iPad here and I'm going to go over some examples with you in real time. This way you can get a better idea of what to expect. Okay, so in this example, we're going to use a property value of $342,746. You might be thinking, that's weird, why don't we just use a round number like $500,000 or $300,000? But the reason why I'm using this exact number is because when I'm done breaking down and doing the calculations for you, I'm going to show you what this actually looks like on the tax website with a real example. I'm going to blur out all the personal information. The home we're looking at was valued at this exact amount, so you can see exactly how that compares. So as a primary residence, you might have found out throughout your research that you get taxed at a 4% rate. So we're going to take $342,746 and we're going to multiply that by 4%. And that is going to get us $13,709. Now, you might be thinking, I thought that the taxes were going to be lower in Myrtle Beach than where I'm currently living. That's absolutely outrageous. Well, we're not done here. This is the full tax assessed value, but then we also have to multiply it by what is called a millage rate. So the millage rate is going to vary depending on the exact town you live in here in Horry County, but they're all going to be very similar. For this example here, this home is in Murrells Inlet, so we're using the Murrells Inlet millage rate. This also varies a little bit year by year. What we're looking at here is the 2023 millage rate. This tends to go up a little bit year by year, but not by that much, and I'll show you here at the end exactly what I mean by that. But here's the millage rate for 2023 for Murrells Inlet. So we also have to multiply this number here by 0.0859, and that gets us the actual value that we are going to be paying for taxes for this home value here in Murrells Inlet, which is $1,177. So that's a big difference there, as you can see, after you factor in the millage rate. Now, what does this look like if it was your second home? We're going to take that same value, and as a second home, as an investment property, again, that doesn't really matter. It's just primary residence versus non-primary residence. You're going to get taxed at a 6% rate. So let me clear out the calculator here, and we're going to take $342,746. Now we're going to multiply it by 6%. And we're going to get that full tax assessed value of $20,564. Now, not only is the percentage that you get taxed at higher, but also the millage rate is going to be higher. So for a second home in Murrells Inlet in 2023, that millage rate was 0.2040. Now, if we multiply that by that full tax assessed value, we get $4,195. So you can see that is a big difference. It's about 3 times the amount actually, maybe even a little bit more than that, 3 times plus maybe a couple $100. Let's actually do the math on that. Yeah, so it's about 3 times plus another $600 is what the difference is going to be if it is not your primary residence. Now, these calculations, again, are a little bit more complicated. You don't just multiply it by that percentage rate. You also have to factor in the millage rate. And I told you that that's going to vary by town. It's going to vary by year a little bit. But there is a shortcut to this calculation, and I'm going to show you what that looks like now. So let's do the shortcut. We're going to take $342,746. And instead of multiplying it by 4%, we're going to multiply it by 0.4%. So 0.4% is the average effective tax rate for Horry County, right? So again, I mentioned it's going to vary by town. So this is going to give you the average if it was your primary residence here in Horry County. So let's take a look at what this calculation looks like here. So we're going to take that same value, and this time we're going to multiply it by 0.4%. And that gets us $1,370 as a primary residence. Again, this is a little bit higher than that original number that we calculated. Again, because this is an average, right? So in some areas it's going to be a little bit lower. In some areas it's going to be a little bit higher. For example, if you live within the city limits of Myrtle Beach, you're going to have a city tax that's added on. So it might actually be a little bit more than this $1,370. In Murrells Inlet, there is no city taxes, so it's a little bit lower, but that gets you pretty dang close. All right, let's take a look at this. 1,370 minus 1,177. We're talking a difference of $193. That's for the entire year, right? Not per month. So that's pretty dang close. So you can do that calculation at home if you're looking at properties. When a property sells, that's what its tax assessed value is, and then it can be reassessed every 5 years. So if you're looking to buy a home, you can take the sales price, multiply it by 0.4%. That's going to get you a pretty accurate estimate of what your taxes are going to look like. Now, how do we do that calculation as a second home? Maybe you want to buy a condo that you can come vacation to or that you can rent out. I mentioned it's going to be about 3 times the amount. So we're going to multiply it by 1.2% instead of 0.4%. So 342,746 times 1.2%. And we're going to get $4,112. And again, that's a little bit lower than what the original calculation was, but again, that is pretty dang close. So these are the shortcuts that you can use if you're thinking about moving down here and you want to estimate what your taxes are going to be looking like. For a primary residence, you can multiply it by 0.4%. For a second home investment property, you can multiply it by 1.2%. Now, I promised you that I was going to compare this to actual numbers here that we have on the tax website here for Horry County. First, I'm going to show you what it looks like as a second home. So here's a snippet of taxes that were paid. This is for the year 2019 because That's when this home was a second home. It wasn't a primary residence. And you can see the total taxes paid here was $4,127. Now that is a little bit lower than our original calculation, but again, the taxes do go up a little bit. That millage rate does go up a little bit every single year. So again, this calculation that we did was for 2023. And again, these taxes here that you're seeing on the screen were for 2019. So you can see over the last 4 years, they haven't gone up that much, but they did go up a little bit. Now let's take a look at what these taxes looked like in 2020 when these did become a primary residence. And you can see that the total taxes paid were $1,146.69. Now we did estimate $1,177. Again, this millage rate was from 2023. The taxes that we're looking at here were from 2020. So they did go up ever so slightly. But again, they're pretty dang close. They didn't change too much. So again, these calculations that we ran here, you can see they are pretty accurate. Okay, so I hope that helps give you a better idea of what you can expect to pay for your taxes, whether or not the home is your primary residence. Now, how do you apply for the home to be your primary residence? Because you don't automatically get this just because you're moving down here and you move into the home, right? You do have to apply. And some things that you're going to need, you need to change your driver's license to the address that you're living at. You are also going to need to register your vehicles at that home that you're living at. And then you need to show that you're filing your taxes from that address as well. You might be thinking, well, when I first moved down here, that first year, I'm not going to be filing my taxes from here because I lived in my home state for 10 out of the 12 months before I moved down here. Well, they will honor it. They will give you that primary residence discount right away before waiting a full extra calendar year. But when you do get to that next year and you do file your taxes from that location, you are going to have to update them with that documentation. They probably won't remind you, so you're going to have to remember to do that. Otherwise, they're going to revert it back to the higher tax rate. Now, there are some other quirky things as well. You know, if you are married, you and your spouse both need to move down here and register your vehicles and change your driver's license in order for you to get that primary residence exemption. And I'm going to show you on the Horry County website where you can go to find all this information, where you can go to fill out the application to get your primary residence exemption. And I'm going to go ahead and hop into that and show you that right now. Okay, so when you move down here and you change your driver's license down here, you get your car registered, you're going to go to horrycountysc.gov. You're going to come down to the departments section. You're then going to go to the assessors section. You're going to press on taxpayer services, and then you're going to click on forms up here in the right-hand corner. You're going to scroll down to the application online, and that's what this is going to look like right here. You're going to fill out all the information, you're going to upload all your documents, and that's how you apply. You can also apply in person by visiting one of the assessor's offices in person, but I think it's a little bit easier to do online. You can also see this link here, changes affecting legal residence. You can go into this. This came into effect in 2012. You can go through and look at all the definitions, and it explains to you everything that you need to do and all of the criteria you need to meet in order to get that primary residence exemption. Now, I also want to show you here, once you turn 65 and you have lived in your home or you've lived in the state of South Carolina for more than 1 calendar year, you can also apply for the homestead application. What this is going to do is it's going to reduce the value of your property by $50,000. So the first $50,000 value of your home is exempt from taxes. So if we had a $350,000 home and you were able to get this homestead exemption here, you'd actually only be paying taxes on $300,000 of that value instead of the full $350,000. So the homestead exemption is actually pretty cool as well, and helps you save a little bit more money when you're here and retired in the state of South Carolina. So that's going to be it for the property taxes here in the Myrtle Beach area. Obviously, that's just property taxes. We didn't touch on income taxes or sales taxes or anything like that, or the taxes on your vehicles, because yes, you do have to pay that here in Horry County. So if you'd like me to get into that in a future video, let me know down in the comments below, and I can do that. If you're ready to find your home here at the beach, maybe you're ready to move here, maybe you're ready to get a second home that you and your family can use to vacation, then I'd love to help you out in any way that I can. You can always use the first link down in the description to schedule a call with me. I'm looking forward to speaking with you. I want to thank you for watching, and I will see you in the next one.